272 days remain until the next Bitcoin halving. It is estimated to take place on the 16th of April, 2024. BTC halvings have always led to crypto market pumps. The price of Bitcoin shot up 8,000% with the first halving, 2,800% with the second halving, and 1,200% with the third halving. And if we're to believe Cathie Wood or Tim Draper, then this upcoming halving stands to be even bigger. As always, strategy is king. I'm going to explain how you can take full advantage of the upcoming BTC 2024 halving, as well as the chain reaction the event is going to have on the altcoin market. Welcome guys to the channel. My name is Maddie and this is Altcoin Buzz. Best of luck if you choose to invest. I always say that genuinely. But I'm still not a financial or investment advisor, so do not take this video to be official financial or investment advice. Heads up if you're watching this video because we have a new exclusive campaign with ByBit, this time with up to $81,000 in prizes. You can get your share and you can earn up to $30,000 just based on how much you deposit and trade. Also, we're launching our brand new trading competition that has up to $51,000 in its prize pool. And the idea here is super simple. The more you deposit and trade, the more you can earn. And if you want to find out more, just click the link in the description below. What is the Bitcoin halving, first of all? For those of you that may be new to the space, maybe new to crypto, you're learning more about Bitcoin. First of all, welcome. More and more people come into this space every day, so the more the merrier. But let me set some context here and try to explain this in the simplest possible terms and really in the shortest possible way. As a proof of work project, that's what Bitcoin is, right? Bitcoin has miners and produces blocks of data every 10 minutes, in fact. And you can see in some of the visuals here that we're showing by our friends over at CoinGecko. They have a great YouTube channel, by the way, themselves that you should check out when you finish with this video, of course. But here's the point. When someone finds a particular block, so the next block in that 10-minute chain, that happens after the contribution of one's computing power to help the network secure itself. So when they find that next block, they receive the block reward. And every 4 years, that block reward is cut in half. It started at 50 BTC every 10 minutes, then it was cut in half, it went to 25 BTC, then half of 25, which is 12.5 BTC, and then half of that, which is where we now stand at 6.25 BTC. And in late April next year, that's less than a year from this recording, the reward gets cut again from 6.25 BTC to 3.125 BTC with each new block. So this means the network keeps running, right? Because transactions keep happening. However, the reward goes down. Now, you'd almost think that it's a bad thing for Bitcoin, but it's not. It's a very good thing, in fact, as long as hashing power, which is the computing power devoted to Bitcoin's security, as long as that keeps hitting new record highs. So miners are going to see Bitcoin as a worthwhile investment, even when the reward goes down to 3.125 BTC every 10 minutes. If we understand the logic now of what the Bitcoin halving represents, let's talk a little bit about why they usher in big crypto pumps. And for that, let me share with you two strategies specifically that you can use to maximize your gains. If you're aware of this kind of information, you are already ahead of the game, so kudos to you. You have 272 days, but you may want to start a little bit earlier. Let's take a look at these strategies. Strategy number one is known as the PlanB strategy. Maybe you've heard of PlanB at 100 trillion USD. We are big fans. This is an anonymous and former quant analyst who really has been making pro-Bitcoin arguments and posts for years. He's gained a good amount of fame and a solid reputation for applying classic analytics to Bitcoin and cryptocurrency. That's because he's the individual behind stock to flow theory, specifically as applied to Bitcoin's stock. In other words, the current supply of Bitcoin. And that's compared to the flow, which is the additional yearly supply or influx of new BTC. And his argument has always been that the ratio should be measured in the same way as it would be for other commodities, such as gold, silver, precious metals. And he believes that each 4-year cycle of Bitcoin operates in two different 2-year cycles. They represent a bullish cycle and a bearish cycle. And a bullish cycle, according to PlanB, starts 6 months before the halving and then lasts 18 months subsequent to the halving. So 2 years in total, but it starts 6 months before the halving event. And if that came to pass, then 6 months before the halving in late April, that would place us in October of 2023, just before Halloween, in fact. Then that 2-year cycle would go on until October 2025. Therefore, that bullish cycle, that 2-year period, would be October 2023 to October 2025, according to this theory. But here's the thing, it's much more than just speculation because the evidence from the 3 previous halvings show that this is the optimal time to buy and hold Bitcoin during these 2-year cycles. You want to get in just ahead of the 2-year bullish cycle, obviously. And so I call it a theory, but on 3 separate occasions, historically, we have the data to back up the fact that this is a very, very sound financial strategy. Strategy number 2 is the more conservative one that we're looking at today. It is simply to dollar cost average into Bitcoin. And really one of the things that's never changed here at Altcoin Buzz and across most of the reputable crypto sphere is the emphasis that people place, the respect that we have for dollar cost averaging. This is known as a DCA strategy. This is where you set a pre-programmed set of purchases, for example, maybe $200 a week, but whatever you're comfortable with, but let's say $200 per week, specifically to buy the cryptos of your choice. It's automated, it takes the guesswork and the emotion out of it, and it creates a schedule that you can really stick to and look back on and be proud of. And believe me, those that have done DCA for Bitcoin have done very, very well. You may not even be aware of it as you're doing it because it doesn't feel like anything special, but you're taking advantage of volatility. Just think about it. If you're doing it automatically every week, for example, your $200 bought so much during times like the beginning of the pandemic or maybe during bear market lows. At that time, Bitcoin was priced at just $3,000 and $16,000 respectively. So if you were diligently putting that $200 in every week or whatever the amount was, you would have profited from those lows just automatically. Bitcoin's resilience over time means that this is a great strategy. And you don't need a ton of money to be able to stack sats. You just don't. Even $100 per month, for example, will build you a nice stack over time. I don't think there's ever going to be a time that we don't recommend DCA as a strategy. It's always effective. Let's just see how it looks if, for example, over the last 6 years, we only bought once every July 1st for $1,000. So that's even less than $100 per month. Here's how it would play out to give you an example. I'll illustrate it here. Your prices would be on July 1st, starting in 2017, $2,576, $6,595 the next year. Then in 2019, $10,822. 2020 would be $9,094. Then in 2021, $33,950. 2022, $19,268. And finally this year, $31,134. Okay, so those were the historical prices of BTC, but let's check out how we would have done in terms of performance. Over the last 6 years, the $6,000 that you would have invested would have bought 0.86 BTC. Contrast that with today, where $6,000 only buys 0.19 BTC at the time of this recording. Therefore, you've more than quadrupled your money. Said a little bit differently, your DCA strategy has resulted in a 327% ROI. And none of us are particularly thrilled at the price of Bitcoin right now. We're not even at a market high, but still 327%, not too bad. And notice in down years, like 2020, the $1,000 buys us more Satoshis, and in up years like 2021, it buys us fewer. That's just how it goes. We're using Bitcoin's volatility again in our favor. The true merit of this strategy is not the fact that you're always buying at the absolute low point. It's just the fact that you're diligently buying all the time on a regular frequency. And over time, you're going to pick up BTC or whatever other asset you want to pick up. Over time, you're going to buy it at some very opportune moments, just without even trying. Let me know if you DCA into Bitcoin or any other crypto. If that's the case, maybe you have an entry strategy, maybe you don't. DCA or lump sum. I'll say it again, never financial advice, but this is something that I would personally vouch for and recommend. It's a good strategy. Again, it takes the emotions out of things. Anyways, let me know what you think about that in the comments below. And now we have a third bonus strategy in which we're going to investigate and examine the most winning altcoins, because we have to ask ourselves, which alts are going to benefit the most from Bitcoin's halving? One thing that we know for sure is that Bitcoin leads and then altcoins follow, right? Bitcoin pumps first, Capital is brought into the market and then it trickles down into Ethereum and the other altcoins. Then we sometimes get an alt season when the altcoin returns surpass Bitcoin. That's how it works. That's part of the cycle. So which projects are also going to benefit? Well, number one, Litecoin. As the second biggest POW project that is devoted to payments, Litecoin will benefit as Bitcoin benefits. Number two is Stacks. As Bitcoin's most popular layer 2, it will become more prominent as Bitcoin returns to the top of the crypto news cycle. There's no doubt about this. We are big fans of Stacks. We think it's going to do very, very well in line with the upcoming halving. Number three, while Bitcoin is not private, its combined full decentralization and pseudonymous nature means it's more difficult to track. And it's definitely possible to do, but it takes some work. And so we think Bitcoin's return to prominence means that privacy will get a kickstart forward. And in that area, we like LF0, Secret, and NIM. They are in a position to benefit from more Bitcoin news and from more hype. And finally, at number 4 here for your consideration, we are big fans of Council. This is one of the leading Bitcoin ordinal projects and wants to be the governance arm of the entire BRC20 ecosystem. As far as we can see, they are just getting started. I want to remind you quickly at the end of this video that we have an exclusive new campaign with ByBit that includes up to $81,000 in prizes, of which you can get your share, and you can earn up to $30,000 just based on how much you deposit and how much you trade. Also, at the same time, we're launching our brand new trading competition that has up to $51,000 in its prize pool. And the idea is super simple. The more you deposit and trade, the more you can earn. And if you want to find out more, just click the link in the description below.